So I wanted to go over a couple of stocks today I think are good examples of repeat behavior, which is a topic I talk about a lot in the videos I do. So the first one is UCAR. So this one has an offering pending here, you see with Maxim. And then this morning, I looked them up in our underwriter lookup. So you can basically type in an underwriter, a fund. You can type in a type of offering, and then it spits out basically the gappers and the moves that happen around the time. So in this case, you'll probably see some familiar names, and these also were zero exercise price warrant offerings. I'll do another video on that of what those are, but these were all done by Maxim, all the same sort of warrant or offering structure. As you can see here, they both have this spike right out the gate, ELPW2, just like this. So that's what we were looking for today, and sure enough, it did pretty much the same thing, spike right out the gate, and then it failed. So that's the first one. The second one is CREG. So the thing about this one, we had some people asking, well, why is it fading? And I actually just did a video on this. And the thing is if a stock demonstrates repeat behavior, you don't necessarily need to know why. I'll go into potentially why. I mean, again, there's no way, I don't really know for sure. But what you can see from the historical charts here, the reason why I'm skipping these ones is because when we post charts in the morning pre-market, there's only going to be market just closed. When it posts charts pre-market, it'll be charts of gappers, but this was an intraday runner. So I wanted to, if we find charts that were posted in regular market hours, then it'll show the charts of the intraday runners. And you can see there's a couple examples where it did sort of the same thing. Let's see where we go. This one. So you can see similar sort of action, kind of like this liquidation. And then again right here. But it has this sort of intraday run, and then it peaks, and then it fades. So even over here a little bit. And then, of course, I don't know for sure, but potentially it's the dilution. I mean, it likely is the dilution. But we have these warrants here. So they did this private placement back in November, and these actually can be exercised cashlessly because there's no registration. And then also this private placement they did for 17 million shares at $1.18. So those were, they're in the money, even all the way down to here, were just registered. So let me just go to chronological. You can see this effect right here. And on the left-hand side, you can see what the effect was linked to. So this S1, and you can see what it was for. So this is for this private placement. And that's it. Yeah, I mean, I think it's good just to recap on examples like these where you see this repeat behavior.